Hello, everyone, and welcome to our webinar on the German elections. So for those of you who have been following our media outlook, you know that we've been stressing out two themes for the end of the year and the beginning of next year. The central banks, obviously, with the Fed and the ECB, but also some elections in several European countries. And by the end of this week, we will reach the first date, so the first big election on our calendar, which are the German elections. And to discuss the subject, we will have Dirk Shumacher on the macro side, so head of the macro research within Natixis, and myself. We will start with an introduction on the political landscape and the changes that could happen with those elections. And after that, we will talk a bit about the market impact, of course, sorry. And we will end up with a Q&A session. While we are talking, do not hesitate to use the Q&A button to ask us which question you have in mind. And now I'll leave the floor to Dirk Shumacher.
Thank you, Jean-Christophe. And hello, everyone. Let's start maybe with the overview, what the German political landscape looks like at this point. And these are the latest polls from end of last week. They haven't changed much over the weekend. As you can see, there's quite a bit of volatility across the political landscape over the last couple of months. Let me start with a quick rundown what the parties look like, i.e. how they are faring in the polls. So the black line, that's the CDU-CSU, that's the conservative of Chancellor Merkel. They had been, or they looked like the clear winner, but we've seen a big decline over the last couple of weeks or months even. A couple of reasons for that, but the main reason seems to me that the main candidate of the Conservatives is clearly not as popular as Merkel. We have the Social Democrats, that's the red line, which have seen a big surge over the last 2 months. They're led by the Finance Minister Olaf Scholz, who wants to be Chancellor and right now seems to have the best chance of getting there. We have the Greens, that's obviously the green line. They were shortly during early May the strongest party, and it looked like we could have a first Green Chancellor, but since then the momentum clearly dropped. As you can see, they're now the third strongest party according to the latest polls, clearly behind the Social Democrats and the Conservatives. Then we have the Liberals, the most market-friendly party in Germany, which is the yellow line. We have the Alternative for Germany, that's the far right, the right extreme party. They are the untouchables in the German political spectrum, though they account for roughly 10 to 12% of the votes. No other party will form any coalition with them. And finally, there's the left party on the extreme left side of the political spectrum. They're around 6% in the polls. Now, one important detail of the German election law is that, if we could have the next slide, please, Jean-Christophe, that you have to gain at least 5% to enter the Bundestag. So a party which does not get at least 5% of the votes won't send any delegates, any members of parliament to Berlin in the Bundestag, which means de facto, given there are lots of smaller parties always, that 45% of the actual votes should be enough to form a majority in the seats. It's also worth noting that the left party is around 6% in the polls currently, meaning not that far away from the minimum threshold needed. So given the error margin of these polls, it's possible that the left doesn't make it into the Bundestag, which of course would then reshuffle everything. But among all the different permutations which are there, which are conceivable, I would think the three are the most likely ones, and I'll list them here on page 4. And let's start with the one which I, at least based on the latest polls, view as the most likely one, the so-called traffic light coalition, reflecting the colors of the parties. It's the Social Democrats, the Greens, and the Liberals, which currently would come up 53% of the votes, clearly enough to have a majority of seats in the Bundestag. There's the so-called left-leaning coalition, the red-red-green, between the Social Democrats, the left, and the Greens, a bit less than 50%, but still should be enough to form a coalition. If the left makes it into the Bundestag. And there's Jamaica, again reflecting the colors of the Jamaican national flag and the parties. That's the Conservatives, the Greens, and the FDP. None of these coalitions would come easily. None of them are natural, and three parties together, that's also something we haven't seen on the federal level yet, if you will. We've seen it on the state level, but not on the federal level. So coalition talks in any case will take a long time. I think that's almost a given. I would note one peculiarity of the current situation, which is that in principle, red, green would look on paper as a kind of a natural coalition in the sense that these are the parties on the left side of the spectrum. But the Social Democrats and the Greens, at least the establishment, the leadership of those parties doesn't really want to form a coalition with the left. The reason being that when it comes to foreign policy, when it comes to the European Union, when it comes to military interventions, NATO, the left has extreme views, at least that's the assessment of the other parties, and a chancellor cannot really rely on them when that's needed. I.e., if there's a crisis, if the allies, if the European partners, particularly France, demands help or wants Germany to join any military intervention, this could become really problematic, cumbersome if the left is part of the coalition. So though this is, if you will, hedging against the extreme risks, I think that forming a red-green coalition would imply significant foreign policy risks for German government. And that's why Social Democrats and the Greens would prefer not to form that coalition. They would probably prefer a traffic light coalition. However, they will not rule out the red-green coalition, and in fact use the talks with the left as kind of a leverage to browbeat the liberals into a traffic light coalition. Because from the viewpoint of the liberals, having a left-wing party would probably the worst outcome, in a sense that when it comes to tax policy and all that, they're clearly on the other side of the political spectrum. But in any case, it's important to keep in mind that the Greens and the Liberals will be kingmakers. They will decide in the end which of these different coalitions will materialize, will become reality. And at least my best guess at this point would be it's a traffic light coalition. What would that change? If we go to the next slide. So this is an overview of all the different platforms of the parties. No worries, I'm not going to go through each of them. But just to highlight there, corporate taxes, income, wealth taxes, fiscal policy, labor market, Europe, climate change, all the major themes in the election campaign. There are significant differences between the parties, in particular between the Greens, if you will, the Social Democrats on the one hand, and the Liberals. When it comes to taxes, all parties on the left side of the spectrum want to increase taxes on high-income households. They want to introduce a wealth tax, which we don't have at this point in Germany. And they want to increase spending, government spending, in particular to fight climate change. Now, the Liberals also want to fight climate change, but do not necessarily want to increase public spending. They want to stick with the so-called debt brake, which is part of the German constitution and which obliges the government to aim for a broadly balanced budget throughout the cycle. And they want to cut taxes, not hike them. So you can see that's already difficult starting position to start for the negotiations. That said, if you look at the noise being made over the last 2 weeks, the statements from leading members, these problems are not insurmountable. A solution, a compromise can be found despite these quite different positions when it comes to fiscal policy or tax policy. I'll come to that in a minute, but let me jump to the next slide to lay out the main theme for the next government. Climate change, really, and fighting climate change has been the main theme so far, and figure on parties on the left, but also the Liberals, the FDP, take it quite serious, and everybody vows to do whatever it needs to be done in order to tackle the problem. Now, Germany has a rather difficult starting position in the sense that it relies, you can see this on the left-hand side here on page 6, more on energy sources which emit greenhouse gases than, say, for example, France, which has a high share of nuclear power, which obviously doesn't emit greenhouse gases. So that is already a steep hill to climb, given the reliance on oil and coal and natural gas. We do see, and that's on the right-hand side, that all economies have clearly improved or reduced the greenhouse gas emissions intensity, meaning over the last 20 years, it's clear that for any unit of GDP, all the big economies in Europe need or emit less greenhouse gases than they've done in the past. So there's technological progress which makes that possible, and obviously changes in terms of environmental regulations. But you can see that on the next slide. This isn't by itself not enough, because the targets now announced, the targets for greenhouse gas emissions are very ambitious. On the left-hand side, you see for Germany the different sectors in terms of how much they emit greenhouse gases. And you see in 2030, that's now the official target enshrined in a law, which the Constitutional Court has reminded the parties and the government it is obliged to fulfill or do whatever it takes to fulfill these targets. That's a big drop in emissions. On the right-hand side, you see an estimate from the Fraunhofer Institute, which is a renowned institute which looks at these kind of things. How much would wind energy, onshore, offshore, photovoltaic energy sources be increased, or how much would the output need to be increased in order to get there? And as you can see, the increase is quite steep. So this is a very big challenge, and it's fair to say that the government will have to intervene one way or the other. And the Greens and the Social Democrats, and we could jump to the next slide, please, clearly want to take government money in their hands and spend it and set up the infrastructure needed to reach these emission targets. And this is not so much a problem of funding per se. If you look at the right-hand side here on page 8, the German debt level is rather low. It's around 70%. It's 10 percentage point lower than after the great financial crisis. And if you look at what German 10-year Bund yields do, it's not a question of is that affordable really. It's more a question of how opportune from a policy point of view that is, and what to do with a so-called debt brake. As I mentioned at the beginning, the debt brake is part of the German constitution, which obliges the government to aim a balanced budget. Problem is, as it says, it's in the constitution. Changing that will be very difficult. It will imply a 2/3 majority in both chambers of parliament. So whatever the next government is going to look like, that won't be really possible to do. So what's needed is a way out, so that you leave the debt brake unchanged, but still can use government money. And how much that's going to be, that's quite difficult to assess. But the numbers, and Jean-Christophe will talk about what that implies for markets, could be in principle quite big. But one way out is to set up a so-called investment fund outside of the budget. So the European laws, for example, would allow for that. It's not counted as debt as long as that fund generates revenues, could be still backed by the government, like say the KfW Bank, for example, but it would need to generate money. And there are some interesting proposals out there, some from the finance ministry or from parts of the finance ministry who came up with these ideas. That will certainly be challenged in court if that's the route taken. If the new government, say a traffic light coalition, agrees that the debt brake should not be changed, but that more investment spending is needed, and setting up this specific investment fund for that target could be the solution, then this will be nonetheless challenged. You always find some German professor who will sue the government and the Constitutional Court for that. I'm not capable, I must admit, to assess the legal merits of any such claim, and we shall see. But people who know more about these legal aspects than I do say it should be in principle possible. If it's not possible, then there are still two other ways. If we can go to the next slide, please. One, and that will be maybe part of the solution anyways, that there's a lot of private saving anyway in Germany. You can see that if you look on the left-hand side of page number 9, this is the current account of Germany, i.e. the net savings of the economy overall. So it's already government debt, government deficits being paid off. Then the net savings are still to the tune of 6 to 8% of GDP. So huge savings there. And some of these savings obviously could be channeled into this kind of investment fund needed. So many advisors could come up with interesting creative plans how you channel that money there and have still a government guarantee and so on and so forth. So what I'm trying to say is the next government has to come up with a creative solution to square the circle here, to ensure that debt brake stays in place because it can't be changed, that there's still enough money because the red line for the Greens and probably also for the Social Democrats to join any coalition with the Liberals is in the end that more government spending will happen in order to fight climate change. And that investment fund will be the solution, I think, at least it will be tried. Another option would be to put it all on the European level. So because then it's outside the German budget. So if you allow the European Union to emit debt, so something like the Next Generation EU fund, this time only targeting climate change and the distribution of the money more according to, say, the size of the economies, then this would be another way if money is needed to do it on the European level. That would probably provide some headaches for the Liberals, which when it comes to giving more fiscal powers to the European level are more reluctant, certainly more reluctant than the Greens or the Social Democrats. But if that's the only way you could make that coalition possible, I see that as another option. Again, keep in mind that this traffic light coalition would be first and will be set up with some internal tensions, which just reflected different positions. But for the Liberals and their voters, probably the most important thing is to prevent a red-red-green coalition, because that would shift the spectrum or the new government clearly to the left in the spectrum, imply potentially a much higher tax burden for some of the high-income households and the corporates, and if you will, the main theme for the Liberals is to prevent higher tax burden for those. On the right-hand side, on page 9, you see public investment spending in Germany. That has obviously increased over the last 3 years quite a bit. 2020, not surprising, but it's still below, say, the level we've seen after German unification in the early 90s. So it's not unseen, if you will, that the government, if there is a big challenge, takes a lot of money and invests it. And I think that's will happen with the climate change, of fighting climate change. Again, the proportion of private money, public money, there's a lot of room to wriggle around, and whatever the new government will look like, that's one of the main areas where they have to compromise. But in the end, I'm hopeful we'll get both, not higher taxes, but nonetheless more fiscal spending. That would be all from my side.
Thank you very much, Dirk, for this overview, which was really clear. Now, if we want to assess what will happen on the market according to Dirk's view, the first step maybe is to look at what happened in the past. And what we see is that in 2013 and 2017, we didn't have a lot of price action around the elections. We chose to look at asset swaps spreads to see if there were any political risk pricing. And what we see is that around September, we didn't have many moves. We have the usual trends over the summer, but those are seen every year and not due to the election. But it was different times, let's say. Everybody was expecting CDU-CSU to remain maybe in charge and the budgetary discipline to be there. But now we know that climate change needs to be fought, and in order to do so, no matter who will win those elections, from what Dirk said, we can believe that we will have more spending, so more issuances. If we look at the next slide, what we see is that since the crisis, Germany has tried to reduce the growth supply on the bond market, and it worked. It came from 200 billion to somewhere around 140 and 150 billion before the pandemic crisis, obviously. It has been helped a lot by the ECB purchase program. So as you can see, the net supply after the ECB purchases were quite negative over the last few years. We see a positive net supply in 2019 due to the attempt from the ECB to stop net purchases, but we will come back to that a bit later. And regarding spending, again, the ECB helped a lot, but it was the case for all countries, pushing the rates way lower than where they were a few years ago. Even if we expect an upward trend in the upcoming months, even years on rates, we do not expect them to reach levels seen in 2008, for instance. So regarding the purely market environment, we believe that if any government need to spend a bit more or even more, it will be okay regarding the level of rates we will have. Now, what we know is that the green transition needs a higher budget. According to our assumptions, Germany could spend 1% to 2% GDP points to fund a green transition every year. So it would be somewhere between 35 and 70 billion per year that would need to be funded. So depending on the split between private and public money, we would land in between. So our current assessment is that they will spend 50 billion a year, which is right in the middle, to avoid any skew, let's say, in our scenario. And now, when we look at what happened in the last few years, we see that when we have a strong negative net supply after the ECB purchases, we usually have an outperformance of the cash market against swaps. And when the ECB tried, as I said before, in 2019 to stop its net purchases, we saw a strong underperformance of the cash against swap. This will be quite important next year. Why? Because currently, without impacting the budget of the German government, we already have a way higher net supply because we would stand somewhere near zero, while this year we estimate that we will end up the year with minus 120 billion of net issuances after the ECB purchases for Germany. And in 2020, we were somewhere around minus 160 billion. Since the beginning of the year, we see an outperformance of the cash market, obviously around 8.6 BPs. 2020 was a bit particular due to high pricing of rate cuts from the ECB in the beginning of the pandemic crisis. So the swap curve followed well the cash market. But now, in a world where the market does not expect any rate cuts or rate hikes due to the new forward guidance regarding the rate hikes and regarding the cuts, the reaction to the pandemic, let's think that if we had a downward shock, we might see more purchases rather than rate cuts. That's an assumption that we have. That's why we see the cash market as a more reactive to the environment, and the asset swaps margin as a good instrument to try to play, let's say, the budget size of the German government. If we go to the next slide and we look at the ECB purchases as a whole, we see that when they stopped the net purchases, we had a strong underperformance of the cash market. But we have to keep in mind, and that's why I've made up this slide, that in the summer of 2019, we also had a deceleration in the Eurozone. We also had a market pricing, a lower for longer mode with a couple or up to 4 rate cuts priced in the market, which helped a lot the swap curve to outperform. So if we had to assess the impact of the end of the net purchases of the ECB, I would say that it was stay around 10 BPs. The rest of the underperformance was more due to the deceleration and the expectation of the market regarding the ECB policy on its rate rates cuts or hikes, let's say. Then we had 2020, which was a bit particular because higher purchases by the ECB were met with way higher issuances. That's why we didn't have the usual outperformance of cash when the ECB steps in. But after that, the upward trend of cash against swaps came back, and now we see that we are on high levels of assets of swap spreads. Sorry. If we want to assess what will happen in the upcoming months or next year, we have to keep in mind that we will have two factors to keep an eye on. So the ECB purchases, it's quite hard today to assess how much they will buy next year. Our current scenario is that they will have 300 billion remaining on the PPP envelope for next year, and on top of that, they might increase the size of the APP, so the old program, from 20 billion to 40 billion. They could do a bit less or a bit more, but we think that it's kind of consensual today to see an increase from 20 billion to 40 billion. So the ECB will be there, but it will be less present than it was over the last couple of years. Therefore, we expect a higher net supply, and regarding that, we have a range of scenarios. As you've seen in the previous slides, without impacting the budget and with the current pace of purchases from the ECB, we would land around 0 for the German bond market. But if we are right on the APP and we do not have an increase of the German budget, we will end up around minus 40 billion. On the other hand, if the PP stays the same, so around 20 billion a month, and we have a 50 billion extra budget, we will land around 50 billion on the positive side. In this scenario, we would see a strong, in our view, underperformance of the cash market against swap due to a way higher net supply if we compare to the numbers of this year and last year. And that's why currently we are forecasting a 30 BP swap spread for December. Regarding what will happen in 2022, we might go back to the former levels, or let's say mean levels that we had before 2015, so below 30 BPs, but it will depend a lot on the choices of the ECB regarding its purchases program for 2022. On that topic, according to Christine Lagarde, we should have answers, or we will have answers at the December ECB meeting, so on the 16th of December. That's why if we are right on the ECB, 30 BPs might be the new equilibrium. If we underestimate the size of the program, we will end up above that. Obviously, we might stay around 35 or even 37 BPs. But if we're wrong and the ECB chooses to reduce drastically its purchases, so keeping 20 billion a month after the end of the PPP, so in April, we might go below 30 BPs and go back somewhere around 25 BPs for the swap spread, the 10-year swap spread. So that's about it. If we want to speak about maybe outright rates, we should at some point next year touch 0 on the bond, if again we're right on our ECB scenario, and but it should happen in the beginning of the year with the comeback of the supply and maybe still some upward surprises on the inflation that could happen in the first quarter, but that's another story. And the reaction right after the election, so it will depend on how much time it takes to form a coalition, but obviously we expect some steepening of the curve on the 210, maybe with an underperformance of the 10-year in the 210-30 fly, but we would play it against swap to let's say brush off all the noise, especially the ones we have this week with the Evergrande story, which can push actually rates lower. So that's about it for the market reaction to those German election. So if you have questions, do not hesitate to use the small button, and we will be happy to answer with Dirk. So Dirk, we still have no questions. I think our audience is a bit shy, so I will be the icebreaker. Maybe regarding polls in Germany, so how accurate are they compared to what we can have for instance, in the US?
Well, the one thing I can say is that the accuracy has declined over the last 15, 20 years as well. That has something to do with the population, the political spectrum being splintering out, the fact that it's much more difficult to get a representative sample, the response rates are smaller. So yeah, a couple of percentage points actually is the error margin probably, which still means there's and that's not the German phenomenon. As you said, we've seen that in the US, we've seen that in the UK, I guess, France, similar. So that is just unfortunate that the error margin's gotten bigger. That said, it's not that things could swing around 10 percentage points. So these three coalitions remain still the most likely outcomes, even if you had to have a couple of percentage points going one way or the other. That remains the likeliest outcomes, nonetheless.
Okay, thank you. And if we want to go on another question, maybe to give some time to our audience to type theirs. What if they cannot agree on a coalition? What would be the thing happening in Germany?
Well, there are two possibilities in that case. Either a minority government, that the strongest party and maybe one other form a coalition, and though they don't have a majority of seats, another party would say, okay, we support you in principle, though not in a formal way. I doubt that's very likely, because such an unstable government is certainly not what anybody wants, and that leaves new elections as the only outcome, which would also again be unprecedented. And I think the hurdle for that remains very high. Or put differently, the pressure on the parties to come up with a working coalition is very high. And say if the ones I've mentioned fail, or it's not possible for whatever reason, then other permutations will be tried. But if, again, for whatever reason, none of these work, then early elections would seem the most likely outcome.
Okay, so and regarding the market impact, I think that from what Dirk just said, the market won't react as long as we won't have a clear coalition and a clear idea of which budget or which impact it will have on the German budget. So any price action will be linked to either inflation, ECB, or other stuff, but not on an absence of coalition in Germany, in my view. If I want to give you a whole answer. So if we do not have any questions, we will close the call there, and thank you all for joining, and do not hesitate to send us your question by email or through your sales, and we will be happy to answer. Thank you very much for joining, and have a great day.
Thank you. Bye.